Back, let's get chatting with the management of Poly Medicure. Remember, the company reported their numbers. There was a decline in their margins, both quarter on quarter as well as year on year. We have Mr. Baid joining in to detail those numbers. Thanks a lot, Mr. Baid, for joining in. Always a pleasure speaking with you. Just wanted to understand your outlook on margins itself. What resulted in the pressure both year on year and quarter on quarter?
Lost the audio, actually.
Can you hear me now?
Okay, all right.
Nigel,
I can't hear you. I lost the audio.
All right, let me try, Mr. Baid. This is Nigel here.
I can't hear you.
All right,
we're going to come back to you in just around 20 seconds or so. Our team is just going to try to fix that right away. But Mangalam, the problem with these numbers are definitely the margin. So we'll be interested to see, to hear out the management in terms of that, and also the export guidance from here on. What's it likely to be? How is the traction on the domestic front as well?
The interesting part about the margins, Nigel, despite Forex being a large component of their overall scheme of things, we have seen the margins compress. So had it not been for that support coming in from the rupee, the margins could have been even worse. So, I mean, we're just trying to repatch that connection with Mr. Baid. I guess in about a few seconds from now, we'll do repatch that connection. In case we aren't able to, Mr. Baid, can you hear us now?
I can hear you, yes.
Perfect. So we were just discussing about the margins itself. That has been one of the sore points of your results this time around. 26% has gone into 18.5% year on year, and it's dipped both quarter on quarter as well. This despite depreciation in the rupee. What is your sense? Where would margins go from here? What is causing this pressure? And what kind of guidance would you give for this entire year?
See, the first thing is in the current quarter, we have seen a margin drop because of our M2M provisions on our treasury investments.
Okay.
So there was a 9.5 crores of treasury mark-to-mark, markdown on that investment. So that resulted in a lower PAT margin. But overall, if we see operating margins in quarter 4 versus quarter 1 is very similar. So I don't see any change there. So if you see that, I think that the numbers are similar then.
All right, Mr. Baid, let's get a few details then going. Margins have been under pressure. I recall you doing more than 25% odd. So my question to you is, have the margin pressure, has it bottomed out now? Point number 1. And point number 2, do you believe that you can get back to those mid-20s in terms of margins? Go ahead.
Yeah, so Nigel, very quickly, I'll point out a few things. So one is the raw material prices have started coming down.
Yes.
So we have seen that peak in, quarter 1. Now the prices have dropped by around 15%. And the freight rates have also reduced by around 15 to 20% or even more actually. And then the INR depreciation against that rupee, US dollar will also help us a lot in future. So we are, all three factors combined, I think we will see a margin improvement plus the revenue increase. As we follow the next quarter 2 and quarter 3 and quarter 4, we've given already a target of 20% revenue guidance for the whole year. So all these 4 factors will improve our margins going forward by 250 pips to 350 pips.
All right, 250 to 350 bips is the margin improvement that you're looking at. And if I look at the current EBITDA margin that you've guided for, or you've done around 19 odd percent, you add 250 to 350 bips to that, you're close to around 21, 22 odd percent.
No, I'll make a correction here because the last quarter there's a 9.5 crore,
Okay, so you add that. So maybe margins could be closer to 24, 25%. Is that what you're saying?
Correct, that's correct.
Perfect.
That's a one-off. Yeah, that's a one-off,
Perfect. And 20% EBITDA, revenue growth is the guidance that you've given. Can you break that up in terms of revenue growth guidance for domestic business as well as exports? I remember 675 to 700 crores is your export guidance for this year. Does that hold?
Yeah, that's hold, and I think we are pretty much on track to do that. And domestic business also will grow by around 25 to 28%. That's the guidance for domestic business also.
Okay, all right. Mr. Baid, then we're looking out for other triggers. That US business, the street has been waiting for that. Have all the approvals come in? Second half of the year, do we see some bit of contribution that will come in? And where do you see that scaling up to, say in the next couple of years? Go ahead.
So we have, our US FDAs are slightly delayed by 1 quarter. So we're expecting an end of quarter 2, but I think we'll get it by end of quarter 3 right now. These are for 3 core products, our infusion products. And hopefully we will start seeing revenues from early January in quarter 4 of current financial year. And in 2-3 years, I think we are looking at a revenue of around close to maybe $7 to $10 million in 2 years time frame.
Okay,
from US market.
All right, that'll be interesting because back, a lot of the analysts were working with a number of anywhere between 10 to 15 million. So you're saying that that has been pushed back, and 7 to 8 million is what you'll do over the next couple of years out there. What about expansion in the renal segment? Because you have a PLI for the renal equipment. You are expanding there. How much revenue can you do on this one?
So last financial year, we have done a revenue of around 55 crores on the renal segment. That was a new segment for us. So this year we are targeting a revenue of around 100 crores in this segment. So there will be quite a significant increase in revenue in renal in this particular year. And as we scale up, as we increase capacities in following years, we will see. So let's say in year 5 from now, let's say by FY27, we're looking at a 300 crore revenue in the renal segment.
And what would you say about the in vitro diagnostics business for you?
So the diagnostic business is catching up right now. I think we still have little headwinds there, but I think we are expanding capacities in our blood collection tube business. I think that is what we are seeing a lot of traction, and it's an import substitute product. So we are seeing some traction there. So there's a gradual growth, but we will look at around 25-30% growth in this business in the current year.
All right.
So from 35 crores, we'll go to around 50 crores.
All right. Mr. Baid, just a final question from my end. All these calculations that you're doing, what is it pegging the Indian rupee at? Do you expect it to be in this vicinity of around 78, 79 odd? Because, that given your quantum of exports, that could have its own share of impact. So what are you factoring in out there?
So we are factoring around 78 rupees.
78 rupees.
Currently for the whole financial year.
Anything more than that is a benefit for you, you would say?
Absolutely.
All right. And then the final question from my end as well. R&D expenditure, you had wished to scale it up from what, 2.5% to 4% of sales. Where does it stand now? And at 4%, you would still hold the margin guidance of 25%, right?
That is correct. So we continue to invest more in R&D, but currently it is still pegging around 2.5%. But it will take a while, maybe another 2 to 3 years to ramp it to 4%. So we don't see much change happening in this current financial year.
Okay. All right. Good speaking to Mr. Baid. All the best going ahead. You're sounding reasonably optimistic. And more importantly, it appears the worst of the margin pressure is behind you as of now. Looking forward to chatting up with you in the second quarter, at the end of the second quarter, to get a quick update.